So, as I have told you, the fundamental analysis and technical analysis, these are the two things. What we have seen that fundamental analysis evaluates the intrinsic value of the share. Intrinsic value means if so what is the share price actually in the market and what should be the price. The difference between generally there is a difference between these two things. Most of the players shares are available either lower than their the intrinsic value, and some of the shares are available higher than their intrinsic value also. So if a long-term investor is there, then he has to go for fundamental analysis and he has to study everything, overall economy of the country, how that particular sector is doing, and how that company is doing against its peers, and how this PE is going on, what is the sales going on, and what the management looks like, and all kind of that sales and the future possibilities, that is important in case of fundamental analysis. But technical analysis differs than the fundamental analysis. It identifies according to stats of a particular share. There are two important things in every share price. One thing is the price, another thing is the volume, and how it is moving historically. A few of the shares, they are the shares they trend on a particular line, while the other shares they move on a particular zigzag manner. So different kind of things are there in case of technical analysis, and technical analysis generally uh, do not provide you the security of the intrinsic value, right? It will give you the trend, it will give you the support, it will give you the resistance of a particular share. Support of a share is that where the share comes back and takes support and again move upward. That is what we call support, right? And resistance is a point from which the share, it becomes difficult for the share to cross that particular line. So what happens is if a support breaks, then it becomes resistance, and if a resistance breaks, then it becomes a support. Say a particular share, say share X is, uh, it's very difficult for it to go beyond 100 rupees price. And it always coming to the 100 rupees price, 100 rupees price, and again comes back to 95, 93, 92, 82, somewhere. Again comes to 100, twice, thrice, four times it happened, and it crosses 100 rupees once. And now it will be that 100 rupees price will become support for that particular share, and now it will not go down, right? Usually, right, it may break, but generally a resistance break, then it becomes support, and a supports break, then it becomes a resistance. So these are the important thing in technical analysis. So fundamental analysis and technical analysis are having its own importance. Sometimes the fundamental analysis misses few things, like uh, the things those are hidden, that is not available in the balance sheet, but that is visible in the technical analysis. And technical analysis give you the exit and entry, exit and entry, so that you can come out and you can reduce your losses. So once you will start reducing your losses in the market, you'll able to gain in the market, right? Further, so I'm coming to the topic of the today. What is moving average? So what is the average? Say we are say 20 people in this meeting, and out of the 20 people, I want to calculate averages. So I have to add the age of all 20 people, and I have to divide it by 20. That is simple. Everybody knows that. But in moving average, there is a period added to that. Period added to that means in chart of a particular share, every day there is a other every time period. This kind of moving average may be on a 1 minute chart, maybe on a 5 minute chart, maybe on a 15-minute chart, maybe on a daily chart, and maybe on a weekly chart. So whatsoever the closing price of that time period that we will take. Say I am going to check daily chart. So, and I am going to apply a moving average of 20 days. So in the last 20 days, whatsoever the closing price of the last 20 days, that will be added and get divided by 20, and you'll get the moving average. Important thing is that earlier the people used to calculate it by their own, but now that is available on almost all the software with a single click. So you will be able to check it at any point of time, at and again any time period also. So that is quite a important tool. Again, this moving average helps you to form different kind of indicator like MACD. Otherwise, we say Bollinger Band. Actually, all these indicators they use moving averages. So if these are the moving averages that forms that those important indicators, definitely that moving average itself is a very important indicator, and it's quite simple and easy to use, right? uh, Coming to the next slide. So simple moving average, the simplest form of moving average known as a simple moving average. Sometimes it is called MA, sometimes it is called SMA. I will tell you there is something called EMA also. But that is a different thing. I'll come to that later. It's calculated taking the arithmetic mean given over a specific period of time. In other words, the set of numbers are the price in the case of financial instruments are added together and divided by number of price in the set. The formula for calculating is simple: A1, A2, A3, whatsoever the period, the price is there, and n is the number of total number of the period, and that comes the simple moving average. Now there are different kind of moving averages like also there, like exponential moving average. So what is that? Are the weighted moving average. So what happens is we include in the weighted moving average, we include the volume, sometimes we include the price in while calculating different kind of moving averages. In exponential moving average is one of the area where we give value, a particular value to a particular price. So the last price that is traded yesterday will become the most important price, and that the price day before yesterday become less important than that, and the price. So whatsoever the price that is far away from the today will become less important, and that is the price that is day before yesterday. Yeah, the price yesterday becomes the most important price. According to that, exponential moving average also get calculated. But that exponential moving average and simple moving average will give you little bit difference only. Otherwise, that is quite easy to apply simple moving average always, and that gives you the clear picture. I will show you how to apply and how to get the picture of the moving average, right? So how we can use a particular moving average and how we can find out an important entry point or the exit point in the in a particular stock, right? So what happens is there are different kind of strategies that we use, and that's why I've told you this is a long topic and we will take 2 days to cover the whole topic. What happens is in a moving average where we apply 20 days moving average, or we apply 50-day moving average, or we apply the golden moving average that we call 200 days moving average, that we call that is most important moving average, the 200 days moving average. So let's come to the uh, stock chart first, then we will find out how to apply and how to check it. Then again we'll come to the PPT and we'll move further, right? So this is HDFC AMC. This is HDFC AMC chart, and this black line. Otherwise, let me tell you how to apply this also, right? Let me eliminate this first. So what you have to do in your WhatsApp or the portal you use, go to the studies and just write here moving average. Once you write that, that is moving average there. Now, once you try to apply it, it will ask how many periods you want. 50 period you want, 20 period you want, or the 200 period you want. So I have applied say 20 period and I have taken this color. I can change this color, and this color say I'm going to take it black color. So this black color is has got applied, and you can see this black line is there, and this black line will show you the 50 days. If that is a daily chart, it will show you the 50 days moving average. Now if I will apply another moving average, and this is say 200 days moving average. And I have to change the color also. I'm taking it black. Oh, I should take it red. I have taken the first one black, red. So now this one is 200 days moving average. So this black red line is 200 days moving average, and this black line is 50 days moving average. So whatsoever the time period I will take, say this is a daily chart. If I'll convert it into weekly chart, it will become a chart of weekly chart of the 200 days with the 200 days and daily 200 weeks and the daily weekly 20 weeks moving average. But if I'll apply into the daily chart, what it will show? It will show me that average of 200 days price and average of the 50-day price. Now how it becomes important? See, what you will find that, especially in case of HDFC AMC chart, see what is going on. This here, this is a 50 days moving chart of HDFC 50 day moving average of this which one, which line? This particular black line. And what you will find, every time price comes to this 50 days moving point and then goes up, and again it comes near to the line and goes up, again it comes near to the line and goes up, again it comes near to the 50 days line and goes up, and it goes on continuously. So see, just this, it comes near to the 50 days moving average and it moves up, it moves again 50 days and comes, and once it crosses this particular line, then it starts further start declining. So this is how a single moving average will tell you that how a particular stock will behave. But there are few very important things also in the chart. You will apply two different moving average, say 50 and 20. But you'll find that these two lines crosses sometimes each other. See this 200 days line, 200 days moving average line is are the 50 days moving average line crosses 200 days moving average line here, and from here onwards chart this particular stock HDFC MC starts moving like anything and reaches to a high of 3811. And just see from here, this particular point, when the 50 days moving average crosses to this 200 moving average line downward, it starts continuously moving downward. So this is how, just see another time. So this here, the 50-day moving average just going down to the 200 days moving average line, and that starts moving in a downward fashion continuously. So this is how you can use for a long term. Say you are going to invest for the years, then you have to use a weekly chart or monthly chart. You are going to invest for the month, then you have to choose daily chart or the weekly chart. So this is daily chart, and you'll apply only one moving average. You'll find that how many times you have got the profit. Say you have entered here and you have exited somewhere here, and again you can enter here and you can get this much high price. Otherwise, if let's say you want to remain invested, then you can remain invested till the time that line or the 50-day moving price is above the price of the stock is above the 50-day moving price. So why to exit from a particular stock if that is continuously moving up? Definitely, if you'll not see these moving averages, you'll not see these moving averages, once this fall will come, you'll feel like that the price may come down and let's book the profit. But your stop loss, this should, now you know that if once you have applied that particular moving average, now you know that once that price will cross this line downward only, then only you have to exit. Otherwise the price is continuously coming to this line and then moves and jumps and comes to this line and jumps. But here, once it crosses this particular line, the 50 days line, then what you have to do? You have to exit from that particular stock. Though it bounces from here, but again it comes down and comes down heavily. So this is how this particular moving average works. Now come to the slide again. What is crossover? So I have told you, once in any chart, right, a price of the stock, right, moves from one, say a 50-day moving average is there and a 200 days moving average is there, or there's a 20 days moving average is there and 50 days moving average is there. Once the lower moving average, once the lower moving average, what does it do? This particular lower moving average price crosses the higher moving average price downward, then you have to exit from the stock. Otherwise, say a particular lower moving average price crosses the higher moving prices upward, then you have to move up, right? So this is how this is prices will move up. This is how you have to find where you have to enter and where you have to come out from the stock. This particular points where you have to enter is known as golden cross, and where you have to exit is known as death cross. I'm coming to the next slide. You're able to understand. A golden cross occurs when a short-term moving average crosses over the major long-term moving average to upside, and interpreted by analysts and traders as signaling a definitive upward turn in market. Basically, the short-term average trends up faster than the long-term average until they cross. So this is very important. Just see. Another thing is death cross. When the short-term moving average crosses the long-term moving average or on a downward side, then you have to come out from the stock, right? Okay, wait a minute. So what you have to do is you have to simply find out these two. I'm going to show you chart tomorrow. I'm going to tell you how to apply these moving averages continuously and regularly with the help of RSI and MACD. But for that, we have to wait till tomorrow. And tomorrow, I'm going to show you more charts on a practical market, and we're able to find out everything there, right? Now, Dr. Roma Singh will continue from here.
Thank you, Priyansh. So, as Priyansh has told you today about certain things regarding moving average, so we can grab opportunities in market by checking these parameters. So, moving average is the most important indicator in technical field. Why timing is important in market is our first question here to discuss the things. Timing is important because if you enter at a place, at a level where the stock will go down, then you will lose the money. So you will have to wait and watch for the optimum timing where you feel that you will be entering and you will be gaining something. So this timing we will decide on the basis of different chart patterns, as Priyansh has told you in last class. And these patterns will again discuss so that you will become familiar with all those things. So this is why we are saying you that you should check different stocks and their different indicators when market is live. So once you decide that you will enter in trading, you can do one thing, you select some stocks and check their trend. So trends are very important. Our next question is what are primary, secondary and minor trends? Primary trends are those trends which goes on for a long duration, more than 1 year. So Priyansh, if you can shift to the next slide, I can explain better. There is a chart. Yes, this chart, this is a weekly chart, but you may see here that there is an uptrend, a downtrend, and later on the downtrend, there is sideways trend. So these are three types of trends. When market is going up, this is uptrend. When down, this is downtrend. But you can see that while market is going up, there are some small trends also. It is the chart is this line is coming down and touching this uptrend line. So these are the small trends, and minor trends are again there. So you may see in this chart that this is moving up. While moving up, it again go down and touches the uptrend line. And while that's before touching this uptrend line, there are other trends also. So minor trends, you may see a minor trend within a day several times. Even in 1,000 times you may see minor trends. But the major trends are, primary trends are those trends which goes on for 1 year or more than that also. The secondary trends which goes for 1 day or 1 week, and minor trends goes from time to time. So it depends on your strategy. If you are a day trader, you should watch minor trends. If you are a swing trader, you should watch the secondary trend. And if you are an investor, you should watch the primary trend. Next slide, please. Yes, then what is the entry point in the market? So as we have shown you a chart of primary, secondary, and minor trends, there when the stock is going up, you should enter at that point and you should wait till it reaches to your target price. So we have to decide in advance what will be our target price, what will be our stop loss, and what is the limit within which we will be doing the trade. So entry point is the point where you buy a stock. Right now we are dealing only with this market, not options. So when entry point is when you are buying, and exit point is when you are closing your position, means selling your stock. So either you will be selling the stock when you achieve your target, or you will be selling the stock if stop loss hits. As Priyansh has told you that in the case of moving average line, we exit if the share price touches that line and come down below the line. So this will be our exit point in the case of the strategy when we are checking the moving average for our market trades. What is this for stop loss and how one can decide about it? Stop loss is that price which we decide in advance that we can bear this much loss only. If suppose market is not going in the direction in which we want it to go, because it is not in our control. Market sentiments are decided by the cumulative sentiments of people who are involved in market. Suppose you are buying something, then somebody else is selling it. That's why you are buying it. So market not always goes in the direction in which we assume it will go. So we will have to set in advance that if suppose market does not go in the direction in which we are feeling our price is falling down, then we should come out. So stop loss is a method to minimize the loss in a trade. Chart and technical indicators tell us which way the market is most likely to go. It is not sure that it will go in that direction. So price movements are affected by market sentiments. Hence, before entering a trade, we always decide about exit level on either side. Either side means exit level is it may be our target level also, or it may be stop loss also. For a swing trader, stop loss may be just below the level of the moving average, but for a day trader, stop loss may be the level of last day's lowest price. This depends on our strategies. So target price is, as I have earlier told you, a target price is an estimate of the future price of stock. So target price is the best possible projected price or limit of a share. And if we decide it in advance, it is better to come out at that price because the stock may again fall down. So technical analysts predict it on the basis of various technical indicators and chart patterns. As and when we will be moving forwards, we will be telling you how you can decide your target price. How important is support and resistance? As Priyansh has told you that there are two levels. One is support, another is resistance. So when you will watch the charts, you will come to know that a price, sometimes price moves between a range. Next slide, please, so that we can discuss it here. Yes, so there is a chart which will show you how you can decide about support and resistance levels. And at these levels, we'll be telling you in next session, as time is, I think, going to expire. Now Priyansh will take over. Thank you. Should I continue?
Wait a minute, I am coming to that slide
okay.
again. Huh?
Okay, so this slide can show you the resistance level and support level. So this line is indicating the movement of a share. You see that at number 1, it is going down. Number 2, it is going up again. Then it slides down up to 3 point. So it is not going beyond 3. It is not going below 3. So it again go up, and going up to the number 4, there is a line. It is not going above it. And once it breaks that line, it can go up because it is a W pattern. So it is a bullish pattern. It's known as bullish pattern. Once the resistance level is breaks, it can go up to the height of which is there in between 4 to 5, in between these two lines. So these are different strategies which helps us to find out the level and target price of a stock. So resistance is which is difficult to break, and support is which is again difficult to break on the lower side. Thank you, Priyansh.
Okay, the point we are trying to make here is we wanted to introduce the concept of moving average, so that I think people are able to understand. Now, the idea is you have to apply. Just what you have to do is you have to apply 50 period moving average and the 200 period moving average in your chart, and try to find out how it works, how the price is behaving when the price coming near to this particular averages. You have to find out why it happens, why these particular levels are important, because most of the analysts in the world, they use 50 days and the 200 days moving average, the 50 period moving average, the 200 period moving average. Because of this, everybody watches that particular price and they react accordingly. So if the most of the people react to a particular price, definitely that will work. So this is how a 200 period or the 50 period becomes important. But every time the price will come near to that, it will bounce back or it will take resistance from there. Not always. So we have to go further and we have to find out that moving average, convergence, divergence, that is MACD, how does it work, and how we will use this chart with the help of RSI. That is RSI will give you the strength on a particular share price. So we are stopping this meeting little early, but the thing is we are going to start again from the 12:15 from in the Hindi. So we will try to continue there for 1 hour completely, and definitely this particular topic is not going to over in a day. So we will like you to share this particular recording also, and we will share the tomorrow's meeting ID also on the same place where you have got this particular link. So you will be able to attend the tomorrow's meeting also. We generally continue our meeting from 11 to 12 in English and 12:15 to 1:15 in Hindi. So this particular channel will give you step by step idea about everything in our technical and fundamental aspects. So I'm going to stop this meeting as the time is over for this particular meeting, and we'll start at 12:15 in Hindi. Thank you. Thanks for today. I'm not having the time to take questions today. If you want to ask questions, come and join the Hindi medium wala meeting, please. Thank you.